Nations Trust Bank just did something huge. They made an 18 billion rupee bet to snap up HSBC's entire retail banking business here in Sri Lanka. And let me tell you, this isn't just another deal. This is a massive statement of intent.
You know, the best way to think about this, it's like David buying Goliath's armor. It's this incredibly bold, audacious move that could either turn NTB into an absolute champion or, well, crush them under its own weight. And this slide really puts the scale of that challenge into perspective, right? On one side, you have NTB, the nimble 25-year-old challenger, and on the other, you've got the legacy of HSBC, a banking titan that's been in Sri Lanka for 133 years. So the real question is, can the new guy actually wear the old armor? Okay, before we dive into the nuts and bolts of this deal, we've got to do the usual housekeeping. Just a quick and important heads up. This is not financial advice. It's purely for your information. All investing has risks, so you've got to do your own research. We're here to break down the strategy, not to tell you what to do with your money. All right, let's get into the number that made everyone's jaw drop, that price tag. So is 18 billion rupees a stroke of genius? Or is it just a sign of being way too confident?
Yeah, $18 billion. When you see a number that big, the first question a risk auditor is going to ask is the asset really worth that much? You're paying a huge premium. What on earth could possibly justify that price? Well, the justification from the strategic visionary side is a classic buy versus build play. See, NTB isn't just buying a bunch of accounts and credit cards. What they're really buying is time. They're buying a shortcut, a fast pass, right to the very top of the premium banking food chain. So what did that 18 billion really get them? Well, for starters, they bought more than a decade of market-building time that they now don't have to spend. They got 200,000 high-value, wealthy customers just like that. And get this, they got what's considered one of the cleanest, lowest-risk credit card portfolios in all of South Asia. To try and build that from scratch, it would take years and billions.
But here's the catch, and it is a big one. NTB funded this entire deal from its own pockets. Now, that shows some incredible financial strength for sure, but it also puts a ton of pressure on the bank. You better believe investors are going to demand a quick and significant return on equity. The clock is officially ticking.
So, this leads us to the absolute core challenge of this whole thing, what we're calling the branch or byte dilemma. This is the friction point, where this deal is either going to work brilliantly or fail spectacularly. It's a real clash of cultures, global prestige meeting local digital power. Think about it. An HSBC Premier card is a global status symbol. It means something when you're in an airport lounge in London or Hong Kong. NTB's strength, though, is its fantastic local digital world, their FriMi app. The 18 billion rupee question is, for these elite customers, can a super convenient local lifestyle app really replace a global travel status symbol? This table just breaks that friction down perfectly. An HSBC client is used to seeing their accounts in London, Hong Kong, and Colombo all in one app. NTB's app is fantastic for paying your local bills, but it can't give you that global view. All of a sudden, that elite client feels kind of blinded. Same with wealth management. HSBC had digital portfolio tracking. NTB's model relies heavily on human relationship managers. Can they digitize that personal touch fast enough before people get frustrated? It's a fundamental clash. Global travel versus local lifestyle. Hey, by the way, if you're finding this kind of deep dive analysis valuable, just take a quick second and hit that subscribe button for us. We're keeping a close eye on every major strategic move on the Colombo Stock Exchange, and you are not going to want to miss what's coming up next. All right, moving beyond the tech and the systems, we get to what might just be the most critical asset NTB actually bought, the people. Because let me tell you, in high net worth banking, the relationships are, well, they're everything. So industry standards would tell you that you could lose up to 15% of your acquired clients in the first year. The optimist sees 85% retention and says that's a huge win. But the risk analyst knows that this 15%, it isn't just any 15%. No, it's likely the most valuable, most globally connected, and highest net worth clients who have basically zero tolerance for any disruption. And here is exactly why that attrition risk is so dangerous. For these high net worth individuals, up to 70% of their loyalty, their stickiness to a bank, it's not to the brand name on the building, it's to their specific trusted relationship manager.
So, the single most crucial point is this, that 18 billion rupee price tag isn't just for a book of clients, it's for the loyalty those clients have to their advisors. If NTB fails to keep the top HSBC relationship managers, if those key people decide to walk over to a competitor, the money will simply follow them right out the door.
So let's wrap this all up. After weighing the massive strategic vision against the very, very real risks of actually pulling it off, what's the final verdict on this monumental deal? On one hand, you have the bull case. This is the dream outcome. NTB perfectly integrates the portfolio, keeps the key staff and clients, and becomes the DBS of Sri Lanka, a local champion that completely dominates the premium market and drives huge fee income. But then, there's the bear case. High attrition from those elite clients turns this into an empty shell acquisition. Integration costs spiral out of control, and NTB's famously lean cost-to-income ratio gets wrecked. Ultimately, this is a story of high risk and even higher reward. NTB has bought the armor of a giant. Now, they have to prove they can actually wear it. So we'll leave you with that central question. Was this a visionary move that will redefine Sri Lankan banking? Or was it a costly misstep? Let us know what you think down in the comments.